Molehill to Mountain. That's the name of the first of a new series of in-depth reports produced by ANZ Research, and it's about the potential for expanding agriculture in Northern Australia. So Paul, as lead author, perhaps you can run me through what the motivation for this report was, some key takeaways, and perhaps some conclusions that were a surprise to you.
We looked at a number of things, and I guess from a historical perspective, we've both looked in Australia and also in Brazil. So this debate about expanding agriculture in Northern Australia certainly isn't new. I mean, you can date it back to, post-World War II, for example. We looked at it, I guess, from this perspective of perhaps why hasn't it been successful in the past? And so, again, agriculture is very much a technical business as far as it very much relies on the soil and weather interactions and what, I guess, you're naturally endowed with as a country in those sort of resources. One of the things we look at is, I guess, the comparison with Brazil and Brazil Cerrado, which is at a similar latitude to Australia. And we draw some comparisons there and also look at why Brazil has been successful over the last 30 or 40 years in expanding production through their equivalent of our Northern Australia, if you like. And there's really two key drivers that came out of that: technology and the ability of new advancements, whether it was machinery or plant breeding, that were critical. And the other one was government involvement as far as, I guess, creating some economic incentives to actually create the step change. And so anything from interest rate subsidies to putting in guaranteed prices paid to farmers. Rainfall's critical, obviously, for agriculture. And again, Brazil's quite lucky. They're very well naturally endowed, if you like, with rainfall. Their summer rainfall is quite consistent. It occurs over a 5 or 6 month period, which is quite a long window to be able to grow crops, and that helps with the profitability of growing the crop through rainfall only, if you like. If we come back to Australia, if we look at the summer rainfall pattern through Northern Australia, it's very, very seasonal, confined to just 2 or 3 month period. And really what that showed us was that one of the key issues with expanding production is the need to have irrigation, or that really water is the most limiting factor and not land as such. It's really about how much water that can be extracted sustainably through the region that's going to be the key to really trying to start to quantify the amount of extra production we could get out of Northern Australia.
So Paul, what do these rainfall considerations mean for potential for different types of agriculture in Australia? We
looked at the two largest industries, the most important industry for agriculture in Australia. So it's the grains and oilseeds industry and also the beef industry. We know Australia's historically had quite a competitive advantage in producing those commodities, and we know that the markets are there in Asia for both those commodities as well. And for both those industries, we looked at the profitability of on-farm profitability if we were to incorporate irrigation into those industries through Northern Australia. And again, price is a key determinant, if you like. Yield is a key one for regardless of what you do in agriculture. Your two key drivers of revenue are really yield, crop yield, for example, and price. So from a price perspective, when you look at what's going on in the grains and oilseeds industry globally over the last 4 or 5 years, prices have fallen considerably, and we've essentially got corn and soybean prices at a 5-year low at the moment. When we incorporate those prices back into our farmgate economic modelling, you end up with negative financial returns if you invest in irrigation to grow those sort of crops. If you look at the beef industry in Australia, and certainly globally, it's actually the opposite extreme. We've got record US beef prices, quite strong live cattle prices here in Australia at the moment as well. If we incorporate growing, say, forage crops under irrigation and feeding that to cattle up through Northern Australia, we end up with some financial returns ranging from around, say, plus 7% to plus 13%. So you're at our lower end of capex investment of, say, around $5,000 or $6,000 per hectare. That's where you start getting up into those double-digit returns for the beef industry. And that's where it starts to get quite interesting.
So Paul, obviously high capital expenditure costs remain quite a significant challenge in terms of the development of agriculture in Northern Australia, but it does strike me that the demand side of the equation is a lot more positive now in terms of greater demand, particularly from Asia.
Yeah, look, one of the things I guess, talk about in the report is really, as you say, Asia is very different to what it was 20 or 30 years ago. And I guess when you come back to our analysis, again, price is a critical input into profitability. When you actually go up into Asia and look at what's going on in some of the markets in Asia, prices are actually, say for grains is a good example in China. is about double what the world price is. So if you're an investor, for example, in China that might already have, a significant supply chain or distribution network in China that can capture that higher price, and you're thinking about linking that back to Australia to gain access to, safe, reliable supply of food and those sort of things, then all of a sudden you can see that sort of the two coming together, where if you can, gain a price that's a lot higher than, say, the world price, you can start to see that investment for capital for irrigation through Northern Australia is much more likely to probably come from Asia than an investor, say, from the US or Europe, or even an Australian superannuation fund who has to base their investment on a low global price for corn or soybeans.
Well, Paul, thank you. It was certainly a very interesting read, and thanks again for your time today.
Thanks, Ricky. Great.